Now turn our attention to PPC. Daniel, let's start with you. Has PPC gone from a juicy dividend play to an Africa growth stories? We saw last year they bought 3 quarries in Botswana for 50 million pula. Now they're in Nigeria competing with Dangote Cement, and they're one of 2 final bidders to buy 58% stake in the DRC state-owned cement producer for $44 million. Have they moved away from being a pure dividend play to an African growth story?
I think both. I mean, they still are a big dividend payer. They actually paid a dividend today. I think it was of 95 cents. It's about a 4 to 5% dividend yield. Fairly good in the current market environment. So I think a lot of investors are looking for high dividend paying stocks, although they're trying to stay away from the construction sector, and that's why PPC has been under such huge pressure in the last couple of years, along with the whole sector. It's been a very tough environment for PPC and all the construction shares, as we've seen. Costs have gone up. Sales have decreased for PPC, but towards the end of last year, they were actually trading in a very sideways pattern as well, around the 23 Rand to 24 Rand for a long period of time, for most of the year. Very, very sideways with no movement up nor down. And towards the end of the year, they actually started to have quite a sharp rally. And they went from around 23 Rand to 28 Rand. That's on the back of a sales report that said that they were going to have a drop in earnings of between 25 to 30%. And thereafter, they said our earnings actually aren't that bad. And there was a shim of light, and they said no, earnings will only be down by between 20 and 25%. So stocks started to rally on the back of that news, that it's maybe not as bad, maybe it's bottomed out, maybe the construction sector has hit a bottom. At the end of the day, I think, and I've been saying for a while, I don't like the construction sector. I think you'll be able to pick up PPC as well as other construction shares at these subdued levels for still a period of time. But at some stage, it's going to turn, and you want to be involved. So I think there is a turn coming, and perhaps it started to turn. Although at 30 Rand, it's probably at a limit for me.
Chris, everyone knows that this is not one of your favorite stocks, but perhaps you won't be as vocal as you were on air. The downturn in the construction sector, something Daniel mentioned, obviously exports slashed by the strong rand, but also the rail problems in moving products from Mafikeng to the rest of Africa, having to go via Cape Town to the Maputo corridor. Could you give us a very, very watered down version of why PPC is not so hot for you? Because I know that's where we're going to go ultimately. Tell us what your concerns are.
Yeah. Look, I think with PPC, it's a company that, although I think well managed, it's intrinsically, I think the management is very earnest and very sincere. And you go to the presentations, you come out more often than not with a feel-good feeling about it. Unfortunately, it's been subject to so many negative ambient factors over the past 3, 4, 5 years that I can't think of many other companies in the JSE that have been bombarded with quite so many negative factors that have been completely out with their control. And now you're in a situation, we've heard a lot of the positives that Daniel is going on about, and I agree with them, and I don't have a problem with that. But I think the negatives, unfortunately, still outweigh the positives, particularly when it comes to competition in the South African environment. It's all very well to talk about the rest of Africa, and I think, as I said earlier, I think there'll be some great opportunities in the rest of Africa in the longer term. But in the immediate term, I think it's still going to be very much subject to what goes on in this country. Construction, it's going to be an absolute dog of a sector, and unfortunately I still think that PPC is not a dog, but a dog with fleas, as far as if I have to put it succinctly. Not that I don't like the company, I like the management, but I think the ambient conditions are still so bad that I wouldn't look at this one.
Well, on a slightly more positive note, Daniel, of all the African operations, Zimbabwe, they've been the most bullish on Zimbabwe. And when they went in, analysts were very skeptical. But in the last 2 years, PPC has repaid that investment almost in full. So clearly the discussions around indigenization in Zimbabwe haven't been so much of a factor.
No, not necessarily. Look, there is increased competition as well. So by moving out into Zimbabwe and overcoming that hurdle was very good news for PPC. There is increased competition, as I said, coming from India, looking to buy Lafarge South Africa now. That was actually, I think that was said today. So there is increased competition, which will put pressure on them. I think it'll shake the sector up a bit, which is good. I think it's needed in this sector to try and maybe get them more on their toes and maybe act more aggressively, hopefully not including with prices. They did get away with that as well, so that was a bit of good news. They did get a leniency agreement in place, as long as they help them with the investigation going forward. So I think, look, I'm slightly more confident on PPC than Chris is, in terms of I do think things do turn eventually, and it has been a dog with fleas. I do agree. I like the management as well, and I do think at some stage it will turn.
Dog with fleas is definitely not hot. Daniel, can I say not hot? Chris, I won't even come to you because we all know what you're going to say. Not hot for you, Daniel?
At 27 Rand, well, after the dividend today, around 26 Rand, not hot. If it does pull back to where it was at some stage last year, in the middle, around the low 20s, I'm interested. I do think it's capped, as I said earlier, at around 30 Rand. So for me, not really hot.
Not really hot. Let's come to something that you think is hot, though, Chris, and that's your stock pick. Surprise, surprise, you have gone with JD Group once again. Tell us why.
You know, I think if you're going to have a stock pick that you really believe in, then you've got to stick with that one and not dilute your attention. And it's JD Group, and it's going to sound terribly boring. Look, I think the basis of my enthusiasm for this one is the fact that currently, okay, it's had a nice rise in the past few weeks. It's up to around about 50 rands or thereabouts, but it's still around about only half what it was 3-4 years ago. I think there's a crisis of confidence. Well, maybe not a crisis of confidence, but there's a lack of confidence, shall we say, among certain investors who are waiting to see the fruits of what JD management has promised. I'm confident that's going to come through, and for a variety of reasons in the short, medium, and longer terms. And I think we're going to see a succession of great results coming out over the next few years, and that, to my mind, will ultimately translate into a far higher share price.
And what's going to be on the back of this good set of numbers that you're anticipating?
In terms of the fundamental drivers?
Yes.
Okay, a number of things. Firstly, I think we're going to see continued margin enhancement from the good work they've been putting in over the past few years as far as the traditional furniture side is concerned. Secondly, I think we're going to see some profound improvements coming through from the old Steinbuild operations. We're talking about Timber City here, penny pinchers, this type of thing. The ability to actually take those businesses and transform them. Relatively small at this point in time, they're getting much, much bigger. But I think the most radical thing that they're going to be doing is getting into the whole long-term car rental business with Unitrans Auto in the longer term. And that, I think, is going to shake up the motor industry at the lower end of the market quite considerably. They have the consumer finance company to do it. They need to leverage that thing up quite considerably to get a much better return on equity. And that's the essence of their business. They want to take that consumer finance company and make it far more wide-ranging and far more interesting.
Thank you, Chris. Daniel, your stock pick is Investec PLC, but when we touched on Lonro PLC, you weren't so hot on that. Tell us why you're going with Investec PLC as your stock pick for today.
Correct, yeah. Investec PLC, the code is INP. I like Investec at the moment. It's currently pulled back to quite a nice technical support level as well. It's heavily underperformed the rest of the financial sector, especially the banks. It's actually been very inverted to them. We actually send it out in Stock Alert as well as a short-term trade to buy it at current levels between 42.70 and 43 Rand. The target on this trade is 45 Rand and the stop loss on this trade is 41 Rand 50 or a close below 41 Rand 50. It's a stock that is a huge it can have a huge growth spurt in a big bull market, and at the moment we don't have a bull market. But at current levels it is attractive as it is lagging quite seriously. So as a short-term trade we like it, okay, for a target to 45, but to add it to a long-term equity portfolio at current levels is also not a bad idea, as hopefully we do come out of this big, large sideways pattern as we experienced last year in the market, and we do happen to go up. I think it'll perform quite nicely in a bull market.
I think it's still too early in the year to be talking technicals. Give us an idea of the fundamentals in Investec PLC.
I just think that with the bull market, there'll be a lot more money floating around and a lot more investment into the likes of retirement annuities and unit trusts and funds, and a lot less pulling of policies or cancellations on policies, and therefore they'll start to perform better.
Chris, your take on Investec PLC very quickly. I need to wrap up the show.
I've always liked Investec, and I was just saying to Daniel earlier, I mean, I go to the presentations that Stephen Kosef gives, and they're outstanding, they're really wonderful, and you come away thinking, wow, I really like this stock, but it is a bull market stock, make no mistake. They are doing the right things, I've got no doubt about it, and I think in the longer term, this will be a winner.
Daniel, your closing comments on JD Group?
I like JD Group as well, just hopefully Europe can pull through, and I like them.